last time in regard to the bills that we have to process. You'll remember last week, Treasury, and let me also welcome the stakeholders that are here, who were with us even in the last meeting. As I was saying that you will remember that Treasury and SARS took a view that instead of them responding in the previous meeting, they will prefer to be given an opportunity to prepare a written response in regard to issues that were raised by stakeholders in their submissions. And we believe that SARS and National Treasury are ready today with written responses in regard to the submissions from stakeholders. So that's the purpose of the meeting. The meeting is officially open. But before we move to the next item, Chairperson, let me indicate that we are meeting against the background of the country mourning the passing of the stalwart, the freedom fighter, Ntate Andrew Mlangeni. May his soul rest in peace. Also, while we are meeting here, Chairperson and honorable members, we meet against the background of bad publicity in the country, disturbing developments in regard to PPE procurement. It has been all over the news in the past month and past weeks that there has been problems in regard to how protective equipment were procured in various provinces. It has been occupying front pages of newspapers. It's all over print, electronic media, social media, and people are talking about this problem of PPE procurement. And if that is the case, I don't think Parliament should keep quiet and wait for media to raise issues which are of public interest. The public will ask a question, where is Parliament when there is an issue of this nature? We don't have all the facts. We rely on what we read on the newspapers, what we hear from electronic media, and what we see on the social media. Parliament has got a duty to hold the executive accountable when there are issues of this nature. An issue of this nature which has captured public imagination can't just be left to be a by the way issue. And we can't wait for next year when the Auditor General will have to come to report to Parliament about the audit outcome. I think we have to do something on a matter like this. I say this because if you look at the reports splashed in the public media, you find companies that are awarded tenders of PPEs going into millions. The question is, when SMEs are coming to Parliament pleading for us to intervene in government, for them to give a fair share of the 200 billion rand, one company is awarded a multi-million rand worth of tender. Why don't spread that to as many small businesses as possible? I'm not prescribing how tenders should actually be awarded. But the question before us, since we started in April in these joint meetings, we are dealing with how we can shift the money from one area to another, how the 5 billion rand has to be reworked around. When we are busy with disaster management bills, others are busy with tenders, which I don't think they followed the rules. We are not sure. I can't be judgmental. Businesses are closing unless we are not alive to what is happening around us. People are losing jobs, but other people are amassing wealth on the expense of the country. These tenders, were they open, fair, and transparent? If ever you relied on the database, on the people who are in the database, how did you compile the database? Were the tenders advertised? Where? Because Section 217 of the Constitution on procurement says, I quote the Constitution, when an organ of state in the national, provincial, or local sphere of government, or any other institution identified in the national legislation, contracts for goods or services, it must do so in accordance with a system which is fair, equitable, transparent, competitive, and cost-effective. Then it goes on 2, 3, and so on and so on. I don't have to go into those details. Where these PPE tenders, the process that led to the service providers being appointed, was the process fair, equitable, transparent, competitive, and cost-effective? That led were they not overpriced? Providers being appointed, was the process fair? Chairperson Karim, it is unusual for me to make this long and opening remarks. But I can't keep quiet as a member of Parliament, as a chairperson of the standing committee responsible for finance. When the public is outraged about what's happening, otherwise we will not be alive to what's happening. They're not overpriced. Without opening for discussion, probably will do that later. It is unusual for me. I will say, Chairperson Karim, that opening probably next week. You can't wait for another year or 3 months, or wait for SIU, or wait for the general. We are Parliament, we hold cabinet for finance, executive accountable. As early as next week, Alan and we'll have to advise before we close this meeting. We should call the Minister of Finance with his officials, probably together with the Department of Health, to come and appear before these 2 committees and explain to us what's happening, what are we reading about, how was this process started of a PPE procurement, and why this outrage, and why all this negative publicity, so that the public is able to know from government through Parliament as to what's happening. I think that will be proper, Honorable Karim and the members, for us to do so. next week we're meeting for 2 days. I think in between those 2 days, we'll have to create slot. If we have to meet after the sitting or a plenary, so that we have enough time for this item, let's do so, honorable members. I think that's very important. Thanks very much. Let's.
Chairperson,
I move, Honorable Karim.
Yeah, obviously this is a Section 75 bill, and you are managing the meeting, but we're here in view of the circumstances. And you said we'll discuss this at the end, and I don't want to belabor the point, but simply on behalf of the Select Committee, I can't see any of us disagreeing with you, Comrade Chair. I think you're doing the right thing. We're discussing right now allocation of more funding through the tax bills, and various sectors are required to do their part to contribute more and so on, so that we can have enough money to, well, we won't have ever enough money, but more money to deal with the COVID-19 crisis. So yes, I agree with you. I think, Chairperson, there's not much to discuss, though of course you're free to throw it open fully later. Is to say basically that it seems to me that you're right. We must discuss this thing. The procurement office resides under the National Treasury. I'm not even sure, but I think that we don't have still a chief procurement officer permanently there. I think it's acting, but I could be wrong. Secondly, Chairperson, we must do it with the Department of Health. But if that doesn't work out because the Health Portfolio Committee and Department are not available, and Parliament, I think, is rising for 10 days, we should either consider meeting with Treasury alone as a first of a two-stage process, or shortly after we come back, we should have both the departments present and whichever minister is necessary. So all I'm saying is, yes, we should do it. We should do it ideally with the Health Portfolio Committee. And if that's not workable, then offline we can discuss what we do for next week. So I fully support it, Comrade Chair, and you are right to raise it. Thank you.
Thanks very much, Chairperson. Let's first probably meet with Treasury, which accounts to us. If we have to have a joint meeting with the Department Portfolio Committee Health, maybe we can do it after. But we have to attend to this matter as soon as possible. And we are proposing that next week, the Minister of Finance and his team, the DG and the Procurement Office, and whosoever is responsible should come and appear before this committee. Anyone who wants to make a comment in this regard, so that we are not seen to be imposing as the two chairpersons, so that members will not live here and say the two chairpersons came and imposed a matter before us. But it's a matter of public interest. We have to attend to it. Alan and Kulekwe, is there anyone who's raising a hand from your side?
Comrade.
Honorable Mavisa.
Yes, I think it's proper really, so that when we argue, we are really properly informed. We cannot keep quiet on this one. I agree with you. Let's have them come to Parliament next week and just explain what is going on. We shouldn't listen. What we are reading in the newspaper, it might be a different story, but let them come and fully prepared and just explain what is going on. Thank you.
Thanks very much, Honorable Maviletsa. Alan and Kulek, any other hand from your side?
Not on our side, Chair. We haven't seen anything.
Okay. No. Okay. So we are that.
Sorry,
Karim.
Since you threw the discussion open for now, which is fine, I think it's a good way to go forward and settle it. The other thing we could do is maybe write a letter to the Gauteng Finance Committee, because the procurement, from what I can gather, is mainly in Gauteng. So that committee also needs to draw the MEC there and their department, the provincial department, before the Gauteng legislature, presumably they, thinking of it or already acting on it. So perhaps we should confer with them too, and the two secretaries can also assist in that regard. But we can mull over that. Thank you.
Okay, thanks, Honorable Karim. Though, when you look at this matter broadly, there has been an issue of scooter ambulances or ambulance scooters. I don't know what they call it, but those scooters that were procured in the Eastern Cape is a matter of public interest which Treasury has to appraise us about. I saw something about blankets in the KwaZulu-Natal. I don't know, but all these stories are in the public domain. So what I was saying, Honorable Karim, if Treasury can come here and give us an overview of how they have gone about designing the specifications of how the PPE procurement should be processed for the whole country, and then take us into confidence about the developments in various provinces. And of course, with special emphasis on Gauteng. But there has been development also from other provinces that Treasury should have to consider. And we'll consider what you are saying, that there has to be letters going to those provincial counterparts. Thanks very much, Chairperson and honorable members. Let's move to item 2.
Chair, sorry, it's Alan. Mr. Ryder is on the chat raising his hand.
Okay. Honorable Ryder.
Thank you, Chair. I'm not going to take up time. I just wanted to agree strongly that the Gauteng issue was not an isolated example. There were various other examples. So, yes, I think we must not limit ourselves to in just one instance. Thank you, Chair.
Okay, thanks, Honorable Ryder. Let's move to the next item, response by National Treasury and SARS to written and oral submissions. Mr. Mumuniat, I hope you are here. Last week, when you were not here, we got the apology, but the committee did not take kind of a statement made that National Treasury was unable to respond because you were not here. It gave a wrong impression to the committee that the whole Treasury is solely dependent on one official. I don't think that's the right impression, unless we got a wrong impression. But be that as it may, the committee expressed its dissatisfaction in regard to that impression. So hopefully you are here, and next time when you are not there, those who are acting for you or your colleagues should have full information of what has to be presented before the Committee of Parliament. So over to you. I'm not sure whether it's Younger, Chris, or Momunia who will lead in regard to responses, or the DG is here. I'm not sure who's leading the team. Over to you, Treasurer and SARS.
No, thank you, Chair. It's Momo here. I'm leading the team. Apologies about last week. But, Chair, I think perhaps it wasn't, I can say that I'm very proud of my team. I think they can speak for themselves, so we don't hold them up. But I think, Chair, just to understand the complexity of the tax bills, it's really hard to respond to the comments immediately. It's these tax proposals go through a process where the entire team has to be involved. And apologies, even to present for today, Chair, the team's been working till late last night and early this morning as well. We've already had meetings because there are complex issues, and I think it's very difficult for anyone to respond when so shortly after the hearings. And with this COVID process, we've had to respond very quickly. So, Chair, I think it's in that context that the team was felt that they were not ready to respond to each of the proposals. But today, Chair, and the way we've done it traditionally is that we always, after the hearings, have at least 2 to 3 weeks where we go back to each of the comments received, and they're given consideration by a very large team within Treasury and SARS, and some of the more difficult issues take longer. So apologies, I think that the process is a tough one, and we do worry about just, I think, creating the wrong expectations when we respond without having gone through our processes within the Treasury. As it is, as you'll see from the presentation today, that the team will deal with all the difficult issues. So they are very well versed with the topic, much better than I am, I should add. Chair, so just to go through the slides, and apologies, that's the reason why we were not able to provide the slides and the document to you beforehand. And I want to emphasize that even for today, every time when we produce a response document, it's a draft. And as I'll state later, it's not something that's been approved by the minister as yet. It is a technical process we've been through, and we'll provide the technical responses. And just to ensure that for both the committee and the Minister of Finance, this time round, we are having the discussion after the bills have been tabled. Normally, we have this discussion before the bills are tabled. And therefore, it's easier then to, the response document kind of influences the bill that is actually tabled. I think this time round, we have to take into account that if we were to make changes to the fiscal framework in any way, then we've got to go through the money bills procedure process to make changes to the bill. So for all of these reasons, the minister will, I think after today's discussion, when we've gone through all the proposals and the committee has commented, and once the committee has finalized its proposals, we go back to the minister for his final approval for the measures. But as I said, this time round, we'll just have to keep in mind that we'll have to follow the procedure, the money bills procedure legislation for changes to the money bill. Where there are changes just to the admin bill, then that change is not, that change can be affected by the committee. But we'll talk through these as we go through, and you'll see it's 100, just under 100 slides that we have. We'll go through them very quickly, and we won't focus on each and every issue, but there's a response for the committee on each and every comment. So we don't do it by institution, but we try and consolidate the comments, and we go through each of them with you. So, Chair, just to go through the first slide, I mean, to make some points that we know, these COVID bills are special tax bills, which are specifically only dealing with the COVID measures. They were not proposed in the budget. They were proposed after the budget. The first time was on the 23rd of March, when the president announced the lockdown. He announced some of these tax measures, which the minister then elaborated on the 29th March. And what happened was, and then there was a second announcement in April, which I'll come to in the next slide. But after the president and the minister made these announcements, we prepared these COVID tax bills and we published them on the 1st of April for public comment. And these bills gave effect to that announcement. And at that point, we were looking at a lockdown, if you remember, that was meant to be, I think, about just a few weeks, so sometime in April. But we thought we were being generous, and we put it out for a period of 4 months. Of course, subsequent events have shown that we're now coming to the end of the 4 months next week, and hence there's been the question of extensions in some cases. But that's the context. The second point to make is that the president then announced a further set of measures on the 21st of April as we got into the lockdown and we realized the impact of the emergency. And I think, Chair, we got to bear in mind that the text proposals actually were probably a very fast mechanism to reach out to existing taxpayers, to companies. And I should add, just given your concern, at least there's no procurement involved or tenders involved with tax policy. It applies to everyone, and everything that applies is put in hard legislation, and then it's between them and SARS. So on the 1st of May, we then produce a revised version of the bills to take account of the first set of comments on those measures that we had consulted, and to add to the new measures that had come through, and these were given. Again, we went through a public comments phase, and these comments have all been taken into account for the bill that's been tabled, that was finally tabled by the Minister for the supplementary budget. So, Chair, to move on to the next slide. No, even the next slide. I've sort of talked through this slide. So, when we published the, as I said, the second draft on the 19th. Sorry, it was published on the 19th May. Am I right, Yanga? Am I getting the dates wrong?
You are correct,
So,
Momo. The first was 1 April, 1 May, and 19 May. Thanks.
Yeah. Okay. So there's already been extensive consultations that have been taken into account. Of course, the consultations have been going through a process through emails, telephone, and virtual consultations. You're not able to obviously have face-to-face consultations. Just to go back on the bill, and I've made the point on the draft response that it's a draft for the consideration of the committee that we're doing today. Next slide. So if you look at the parliamentary process, I think we just outlined here that some of the processes that I've talked through, I won't go through them in detail, including the fact that we also had a previous hearing in Parliament before the bills were tabled. And yeah, so we can move on from this slide. I think I've talked through the process. So, Chair, I think today, if you look at the key issues, because although there's 100 issues, and I said we're not going to go through each and every slide in detail, but we will focus on the key issues. And the key issues are spelled out in the slide. It's the expansion of the ETI, the streamlined special tax dispensations that we've announced for these funds, the skill development levy holiday, and the solidarity fund. So that's on the money bills issues. Then on the administration issues, which is not a money bill, to repeat, there's a few issues covered there as well. And some of the deferrals and extensions are covered here because there's no fiscal consequences for some of those measures. Next slide. Next slide. Okay. So, right, Chair, now, I think I want to make the point that many of the comments that we received are kind of, and sorry, the slide that we had with the additional comments and why we say they're out of scope. What we're doing is that people have commented on many issues. In this session, we're going to focus on the comments made on the proposals that are in the COVID bills. But there's many other proposals which are also related to COVID, which may be more of a tax assessment issue. And so there may not be the same urgency that's required. Some of those will only be felt by the taxpayer when they're after their final assessment. So, we could, and we are considering some of them, but I want to make the point that for those proposals, okay, so I said there's COVID proposals for the tax measures that are in the bills. There's also some COVID-related proposals that aren't in the tax measures. And then there's a third category of measures that don't necessarily fit in with COVID, from what we can see. And what we're doing is that we are considering all the additional proposals made. But I want to emphasize so that we don't create the wrong expectations. Many of these proposals we are not necessarily ones that we would accept. We've got to balance with a range of issues like what's the impact on revenue, whether this is really specifically COVID related, and whether an announcement has been made in the budget or related to COVID. Now, on the one hand, we are monitoring what's happening with COVID, and certainly we don't anticipate making further announcements on COVID. If let's say we reach our peak and things normalize, well, we will never normalize to 100%. The economist has called it, if we get to say a 90% economy in 2 months, then I don't anticipate any further COVID measures or announcements that will be made. There will be some announcements made in the budget or possibly MTBPS as an exception if there's a need to, but to deal with some of the tax assessment issues. There will also be, but however, if we have a second wave and it comes sooner, we haven't factored for that at this stage in the tax proposals. And when I say we're open to looking at those issues, we'll do that as it comes. But for now, we are kind of premised on the fact that hopefully by, I should say, inshallah, by the end of 6 months, that we'll have dealt with the peak at this stage. Obviously, the COVID story is going to continue, but hopefully it will not be going beyond the peak that we have. So in considering, as I said, these proposals, we have to look at all the many objectives, and there's a number of proposals which may have less of an impact on the fiscal framework, like the tax residency test. These can be considered, but are less urgent, as I said, because they may impact on COVID, but in fact, COVID does impact on this. But we feel it could be done, after the end of the tax, because these are beyond the tax year. These could be included in legislation either later this year, because we are in the process of publishing the TLAB, and some of these measures are taken into account in TLAB, but this specifically will not be taken into account. We are considering that the tax year assessments that we could then add it onto the TLAB process after we publish the initial TLAB. So the TLAB may be done in 2 phases as well, as we've done with the COVID. Chair, I think that's it for these slides. We can now move on to the next one. No, the next slide. No, I've spoken through this. The next one. Okay, I'm going to let the team will now come in And I should add, Chair, that it's hard for me also to see the team because we're not together, but we've got Yanga and Chris. I know Nombula is here, Lerato is here, Malay is here from the Treasury. I don't know who else is here. They can indicate at some point. And then Franz Tomasek, I think, is here with his team. I'm sure Renel and Johan are there with him. But they will then come in on the different proposals. They know who will speak. So who's speaking on the next slide? I don't know if Franz or Yanga, Chris, if you want to add on to the intro, and then we can go through the slides.
Thank you, Momo. To the intro, I'm happy that because in the intro, we are showing that because during the public hearings, there was a view that we did not adequately consult the taxpayers. But because this is during the COVID-19 period, we did receive written submission. We published the bill, the draft bills 3 times, and we did receive written submissions. The reason why the slides are like we've got 100 or under 100 is that we are trying to show the committee as well as the public that these are the comments that we received on the initial draft and these are the changes we made. These are the comments we received on the revised draft. These are the changes we made. These are the comments we received on the second revised draft. These are the changes we have made. So, and then these are the comments that were made during public hearings. And these are the changes that we'll be requesting the minister to approve. So that this is why the presentation is longer, because we want to indicate to you that even though we did not do the normal public workshop we normally do, but we did try to do the public consultation. I think Chris is the one who is doing the ETI. I'll follow after that.
Thanks, Mama. Thanks. Good morning, honourable members and chairs. I'll try and go through some of the proposals on the employment tax incentive changes that we did. If we go to the next slide, let me put my camera on. Thanks. If we go to the next slide. Maybe I'll talk to it before it gets there. Okay, so one of the main measures we did as a result of the COVID pandemic and the lockdown was to have quite a large expansion of the employment tax incentive. We really wanted to try and incentivize employers to hold on to their lower income employees. So by providing an additional amount that they could receive if they continue to pay those lower income employees wages. Initially, the increase was 500 Rand. So it's for an individual who was already receiving the employment tax incentive, the employer would get 1,000 Rand, and then we upped that to 1,500 Rand if they were in their first year of employment. If they were in their second year, it increased from 500 to 1,000. And then we did a very big expansion of those who were eligible. So the original employment tax incentive works that only those in their first or second year of employment with that employer would qualify for the incentive if they met the age and the wage criteria. But we extended that for all employees, regardless of age. So it could include those above the age of 30 all the way up to 65 that could then receive an incentive. The employer could receive an incentive if they kept them on their payroll. So, okay, so in terms of the first question, the comment, it was asked that this amount should be increased. So the 500 Rand is there for the additional amount, but it's not enough and it should be increased. We accepted that and we made changes in the next revision of the bill to increase the value. If you go to the next comment, clarity was sought whether it was government's intention that employers could receive relief that is larger than the value of the wage that is paid to the employee. So there's a chart later on which I will go through to explain, but we got comments saying that in the initial version of the bill, employers could receive an amount in the incentive which was actually larger than the wage that they pay to the individual. And we've accepted that comment and we made changes to that initial draft. And that is what some of the commentators have said, well, now some employers had changed their payroll systems in order to align with the initial draft. But then we made an additional change, which is a result of this comment that we received, which now they're saying we would be, we have overclaimed the ETI as a result, and there might be penalties and interest. So it comes from this comment. If we go to the next slide, there were also comments about the fact that because of social distancing and because of the lockdown, some workers might not be able to work the full number of hours that they're remunerated for. And if they don't work those hours in the original Employment Tax Incentive Act, it leads to a reduction in the value of the incentive. And that was also, we also accepted that change. So we made revisions to the hours and how they work and how it applies to the value of the incentive that they receive. If you go to the next slide. There were also comments that we only wanted tax compliant employers to be able to access this incentive, and we didn't want employers to come in immediately after in order to sort of take advantage if they weren't claiming this incentive. So there was a requirement that you needed to have already registered with SARS from 1 March 2015, and comments were asking, can't we change it to when the national lockdown actually began, so that if you're registered by the 23rd of March 2020. So we accepted that, and we changed the date to the 25th of March for that compliance. And if you go to the next one. Okay, and this shows the changes that we made in the revised version of the bill that was published on the 1st of May. So we increased the value from 500 Rand per month for employees that earn less than 6,500 to 750 Rand per month for 4 months from the 1st of April to the 31st of July, which was going to have quite a large fiscal cost for government for this additional incentive that would then go to employers. We also made changes to the formula that we spoke about, to the monthly hours and to the requirements to being tax compliant in terms of the date. If you go to the next chart, I'll just try and explain how this works in terms, because I think it was quite a contentious issue when we met last week. So if you look at this chart, which looks a bit like a mountain, this is how the incentive works. So the bottom axis is your monthly income, which goes all the way up to 6,500 Rand. And the y-axis on the left is how much you get as an incentive. So the incentive in the dark lines, it gradually goes up until you get to about 2,000 Rand in income. It stays flat from 2,000 to 4,000 and then gradually goes down to 6,500. And that's the structure of the original employment tax incentive. And we've got very good reason for that. We try to avoid cliff edges in tax policy as much as you can. So for example, if the flat section went all the way to 6,500 Rand and then dropped straight down to nothing, there would be a very big incentive for employers to reduce wages to get just below 6,500 Rand so that they can get the full value of the incentive. Whereas if you taper it away, there's much less of an incentive for employers to reduce wages, which is similar to how these incentives are run globally. If you look at the light shaded lines, that's what the initial draft had done. So the light shaded lines had tapered the incentive down, but only to 750 Rand at a wage of just above zero, which actually meant that employers could pay an employee 1 Rand, but then they would receive 750 Rand as an incentive. And that was the comments that we received, was this government's intention? That, that wasn't our intention to do that. We didn't want employers to be able to reduce wages and either receive a very large incentive or the same incentive. So we changed the bill to taper it down to zero in the way we had done with the original ETI. We think that change was necessary to do. So even though it has led to a situation where a couple of firms may have done their payroll according to the initial draft, we think it's important that it was changed to reflect this. And we'll get onto the compliance and penalties later. Okay, if you go to the next chart, the next slide. So these were the changes we made. So we also made changes to qualifying employees. There was a scenario where some employees wouldn't actually have been able to claim the incentive. We were trying to get this for every employee that was below 6,500. And there were some scenarios where if the employee had been employed before October 2013, they wouldn't have been able to claim the incentive. So we made changes to allow it for them to expand the base even further. And then I've spoken about the hours. So we can go to the next slide to try and save some time. Next slide. Okay, there we go. Thank you. So there were also questions about, could this relief be extended to domestic workers? We didn't accept that. The employment tax incentive runs through the payroll system. So those domestic workers, the employers of the domestic workers would need to register for pay as you earn, and a lot of them aren't. And we weren't going to change the whole structure of the incentive in order to cater for that at the moment. So it's always been part of the way the design works to go through that pay as you earn system. The next one was about the minimum wage. And the interaction with TERS. So there were some comments in the public hearings about why aren't the payments for the temporary employee relief scheme included when we were looking at the minimum wage in terms of being able to access the employment tax incentive. From our perspective, the temporary employee relief scheme is not a remuneration and wouldn't have counted towards that minimum wage, but also if the employee is receiving a temporary employment relief scheme, which those payments I think were up to a minimum of 3,600 Rand, we didn't feel there was a need to have another additional incentive for the employer on top of that, on top of the TERS amount. So it was intentionally excluded as part of having that calculation, so that individuals wouldn't be able to claim both. This slide was on the, subsequent changes have led to a potential for interest and penalties or amounts below the incentive based on the initial bill. So we are very amenable to the fact that this was due to no fault of the employer, that they may have made a claim on the initial draft bill that was then changed later. So we will propose that there would be no interest and penalties on amounts that were overclaimed for the ETI for due to that change, but only due to that change in that month when that occurred. So we are working with SARS. We have agreed that no interest and penalty should apply for those amounts. It wasn't due to the faults of the employer. If we go to the next slide. I think we've gone through that. Sorry, next one. Okay, there was also a change to say that we made a slight adjustment to monthly remuneration in the 1 month, and it should be adjusted to be consistent across the whole period. This was quite a difficult period because we were trying to get these incentives in very quickly. Within a week or two, we were asking payrolls to make changes, so they had to make changes incredibly quickly. The initial change to that monthly remuneration, all the payrolls were run based on the initial version of the definition, and then there was an adjustment made in the next version of the bill, but only for months going forward, and then the payrolls could make those adjustments for the months going forward. We didn't. The payrolls were done based on those definitions, and we didn't think we needed to make a change that would then go back in order to be consistent, as it would create even more complications. So we didn't accept that one. Next. So there were some concern, there were requests to say, shouldn't we, if you remember the chart going back, can't we extend it going much further forward and to much higher wages? Because there will be individuals who are employed that are on incomes above 6,500 and that might be at risk of losing their jobs. We didn't accept that. This was quite a large fiscal cost to government, and we really had to consider a lot of variables in terms of our fiscal position in terms of getting that 500 billion rand package together, that would have had a very large fiscal cost. There are a lot of employees at those levels of income that then would have been and employers would have been able to claim those amounts. So it would have increased the fiscal costs quite dramatically. So instead, we thought the focus should be on increasing the value of the incentive for those on lower incomes to keep those on lower incomes in work. And the majority of the tax relief goes to those cases. Next slide. Okay, so there were also queries on the conditionality of the incentive. So shouldn't the incentive be conditional on the fact that there is an increase in employment growth overall for each firm? And that could be checked based on the pay as you earn. So this had been investigated quite at length before the employment tax incentive came into being in about 2013 or so. And the feeling was, we didn't want to, if there was a reduction in a firm's employment, which could have been due to any other types of reasons, perhaps individuals have left on their own accord, perhaps some have retired, that suddenly it would kick out that entire firm from being able to access that incentive. Similarly, in this environment where a lot of firms are being forced perhaps to lay off staff, if they couldn't access the incentive at all, if they had even a small decrease in the overall number, then there might be even larger losses of employment within that firm. So even if they had a small decrease in the overall number of employment, by having the incentive, they might not be, there is an incentive for them not to reduce their numbers even further. Whereas if that incentive goes completely, there might be even more job losses. So our approach is not to have that conditionality with this incentive. There was a similar question about, they're not sure if this incentive is even working and where is the evidence for this. 2 years ago in 2018, there was a very long NEDLAC process that was instituted by the Standing Committee on Finance to investigate this incentive. It went through a very long process. The NEDLAC report was put together, a lot of research and independent reports went into and were presented to NEDLAC. The final NEDLAC report stated that there is a positive impact on this incentive, and they unanimously agreed to extend the incentive for 10 years, which then went to the Standing Committee on Finance, and we extended it for 10 years last year, or a year and a half ago. Thanks. Next slide. Next slide. Okay, thank you. Okay, so we've spoken about this is the penalties and interest that we've accepted. Next slide. Okay, so one of the next questions that were put forward was, given the lockdown, the length of time of the lockdown, can this relief on the employment tax incentive not be extended beyond the 31st of July? At the moment, we've not accepted this proposal. The employment tax incentive and this large expansion is very costly for government and does have a very large impact on revenue within this year. The additional tax relief that we provided in the COVID bills was included in the supplementary budget, which was presented by the Minister last month. And as part of that is the fiscal framework, which has then already been improved by Parliament. So if we were to extend this employment tax incentive one in particular, because it's not a deferral, it will lead to a direct tax cost within the year, which would then be against the fiscal framework that has already been approved by Parliament. So we don't think we are able to do it at this stage, also given our current fiscal constraints. I think that's everything on my side. Next slide. Thank you.
Thank you, Chris. Thank you, Chair. The next slide is dealing with the streamlined tax dispensation for COVID-19 relief funds. Next slide. On the bill that was published on 1 April, there were proposals to provide tax relief for COVID relief funds. And the proposals that were included on that bill were donations made to disaster relief trust. On the bill published on 1 April, we had trust will be tax exempt. Donation will qualify for 10% tax deductible donations. And then where a payment is made in terms of a weekly allowance directly to the employees of the SMME, the fund is exempt from PAYE withholding. And the last one was that we said when the trust at the end of the 4-month period, they have to cease to exist, and then they will be deemed to be a small business funding entity as contemplated in Section 30 Cap C of the Income Tax Act. Next slide. We want to indicate to Parliament that we received the comments on the first draft, and the first comment we received was that we cannot refer to trusts because these COVID relief funds, they can be trusts, they can be non-profit companies. So we did accept that. We did accept that, and then we changed from trust to funds. Next slide. The next comment that we received was that we should extend the Section 18A tax deductible donations to donations made to outside South Africa, not only in South Africa. And we did not accept that comment because currently the provisions of the Income Tax Act may give relief only if the donations are made in the country, that is the tax deductible donation. So we said that we're gonna apply the current provisions, we're not gonna introduce the new measures here. Next slide. The next comment that we received on the draft bill that was published on 1 April was that goods and services donated to COVID-19 should also be allowed as a tax deduction. We partially accepted this, and we say partially accepted because currently the provisions of the Income Tax Act allow for donations in cash or property in kind. That is goods donated, not services. So changes were made to clarify that donations in cash or property in kind will be allowed. Next slide. There was a view that the current bill does not adequately make provision for funds that make payment to employees of SMMEs. Based on the public consultation and the telephonic conversation we had with the targeted funds, we explained this issue, hence we are saying the comment is misplaced. Next slide. The next one was that at the end of the 4-month period, there was a provision to deem these to be a small business funding entity. So we received comments in this regard, and we made changes to say that if it is not dissolved after the 4-month period, they should be given a chance to apply to SARS, to the commissioner, so that they can be eligible for any public benefit organization exemption provisions applicable in the Act. Next slide. There were, on the revised draft bill, based on we had briefings in Parliament on 23 April, and then on 1 May, we issued a revised draft bill for public comment. And then on the revised draft bill, we made changes to say that there is no deeming, there should be a pre-approval process. So we received comments to say that the pre-approval process delays, it is not necessary. So we did not accept this comment because currently, in terms of the existing provisions, you have to go through the pre-approval process so that SARS can see that you really qualify for the relief in terms of Section 30. And SARS has indicated to us that the pre-approval process does not take too long. Next slide. So the next slide deals with the withholding obligation, PAYE, whereby these COVID relief funds, they came with a new model whereby they will make loans, but they won't pay the loan directly to the employer of the employees of the SMME. They'll pay directly to the employees themselves. So they said that the provisions are not clear regarding this. Then changes were made to direct the payments to the employees of SMMEs on behalf of those SMMEs. I've already dealt with that. The next slide. During public hearings, there was a view that the current provision do not adequately address the issue of Section 18A receipts. I think that was from SAICA. And then we want to clarify to Parliament that the provisions in the COVID-19 tax relief bills are linked to the current provisions in the Income Tax Act. And then whereby we are saying that firstly, it should be deducted in accordance with the Section 18A of the Income Tax Act. And secondly, the deduction may be claimed subject to subsection 2 of Section 18A of the Act. And subsection 2 of Section 18A of the Act enforces that there should be a certificate in order to claim. When we had discussions with SARS, we understand that the Solidarity Fund is already doing this, and it's applying the provisions of the Tax Act as they are. So we think that the legislation is clear in this regard. Next slide. During public hearings, there was a proposal to extend this relief. As we have said earlier, we accept provisionally this proposal because we understand the impact of COVID-19, and because even in the current legislation, these entities will qualify for tax exempt status. So we can say that they are tax neutral. So what we are going to do, proposals will be made to the minister to request Parliament to consider extending the special dispensation for COVID-19 relief funds for a period of 2 months. This is accepted. The next slide, we are dealing with the skills development levy. On the revised bill that was published on 1 May, additional tax measures were included. One of the additional tax measures was the skills development levy holiday for 4 months. Next slide. We received comments on the revised draft bill that was published. One of the comments was to say that in the COVID-19 draft bill, we should insert a provision saying that the Minister of Finance must be allowed to extend this tax holiday by notice in the Gazette. This is not accepted. There is not even a single measure that is included in the COVID-19 tax bills that make provision for a Minister of Finance to extend the relief by notice in the Gazette. Next slide. The next one was that we should insert a mechanism for SDL holiday if companies are in financial distress after the relief period of 4 months has terminated. We have not accepted this. All relief measures contained in the COVID-19 bills apply for a limited period of 4 months. There is no provision that allows for any relief to continue if the company is under financial distress. As we are saying here, if any of those extensions are requested, we still have to request the minister. Next slide. The other comment that we received was that currently the SDL holiday applies for a period of 4 months from 1 May to 31 August. There is a stipulated time frame. So we were requested that the SDL employees should choose the months. And then we said no, because there is a reason why the SDL holiday is applicable from 1 May to 31 August, because All these provisions were made during the COVID-19 pandemic. Next slide. The other comment that we received was that we should extend the SDL holiday to 12 months. As Chris has indicated on the extension for ETI, the additional SDL relief is a direct cost to government, and the extension of the relief will increase this cost. And the additional expenditure is not included in the fiscal framework from the supplementary budget, which has already been approved by Parliament. So extension of SDL to a period of 12 months is not accepted. The last comment that we received on SDL was the interaction between the SDL holiday and the requirements included in the PPE Act. So our view is that we've noted this, but we are of the view that the exemption from SDL must not affect any other provisions which need to be complied with. The next proposal was increasing the tax-deductible donations available for donations to the Solidarity Fund by additional 10%. Based on the President's address on 21 April, on 1 May, additional measures were made to increase the tax-deductible donations made to Solidarity Fund by additional 10%. And then the comments that we received was that why Solidarity Fund, all COVID-19 relief funds, they should be getting the 20%. We did not accept this because we are of the view that the additional 10% was intended to encourage support to the centralized national effort. And because other COVID-19 relief funds are not government initiative. So hence the rationale for additional 10% only for Solidarity Fund. Yes, I've just said that. The next one. Okay, I'm done with the issues raised on the draft management tax relief bill. France will deal with administration bill, the section 75 bill. Thank you.
Good morning, Chair. Good morning, honourable members. Thank you for the opportunity. So we begin this discussion with the definition of a qualifying taxpayer. So if we move on to slide 54, so that's 2 slides on, you will see that we need some basis for deciding who will be qualifying for the relief in respect of pay-as-you-earn and provisional tax. And so there's a shorthand term defined of qualifying taxpayer. And the initial bill, draft bill, proposed that it's any company, trust or partnership that trades and whose gross income for the relevant year assessment does not exceed 50 million rand and doesn't have more than 10% of its gross income coming from what is essentially passive income. There's also a requirement that the taxpayer be tax compliant. So no outstanding returns, no outstanding debt unless a payment arrangement has been made or it's subject to a suspension because it's been disputed or it's under 100 rand. So we then got a set of comments on the first bill on the next slide. And there the comments were, well, 50 million seems a bit low and that should be increased to 100 million. And so my colleagues at Treasury and SARS looked carefully at the numbers to see if that was affordable, and the conclusion was that it was. So the gross income threshold or cap, depending on how you look at it, was then proposed to increase to 100 million rand. Moving on to the next slide, there was a question that was, well, people don't know what their current year's income is going to be, so perhaps we should base this on the previous year's gross income. Now, the difficulty here, of course, is that last year you weren't affected by the pandemic, so the numbers are going to be higher or lower, because you may have some companies that are in financial difficulty this year but weren't last year, and you may have some taxpayers this year who are in fact doing very well out of the pandemic and have increased their gross income substantially. So we did not accept this proposal and stuck with the concept of looking at the current year's gross income. And we'll get to some of the implications in a moment. Moving to the next slide, the question then was, well, isn't it that you need to be compliant? And the response is no, that is aligned with government's general policy around tenders and some of the other relief that's being provided. And you do need to be compliant. But all is not lost for someone who started out non-compliant, because as soon as you correct your non-compliance, you may access the relief from that point forward. So as an example, if you were non-compliant in April, or May, and you managed to fix the situation, then in June, July, you would be able to make use of the relief again. And then, of course, I should point out that the relief we're talking about here is largely automatic. Once you have met the requirements, you're eligible for the relief. If you don't meet the requirements, you're always in a position to approach SARS on a case-by-case basis to see if you can obtain relief. Moving on to the next slide, the technical point was made that a partnership doesn't have any gross income because it's the partners who are generally the taxpayers. So how do you work out the gross income for the partnership? We accepted that, and we brought in a rule to help you quantify it. The comment has continued to be made, however, that why are we dealing with partnerships at all? Because they're not taxpayers. It makes no sense. Respectfully, it does, because in the employment space, a taxpayer may well be registered as a taxpayer as the employer, and so we definitely need that rule in place to assist in partnerships and the employees' tax space. Moving on to the next slide. Then the question was made, well, perhaps PBOs should also be permitted to access some of these reliefs. Well, clearly we're not talking about the provisional tax relief unless we're dealing with a trading PBO, in which case the problem doesn't arise. So we must then be dealing only with the employees' tax. And the response here really is that this sets of automatic relief are targeted at businesses. And in any event, part of your problem here is that your gross income cap really doesn't work very well in the PBO space, because a PBO doesn't generally have gross income of any substance, again, unless it's trading, because a lot of its receipts will be of a capital nature. So the model doesn't quite work. And so if the PBO is in difficulty, it is welcome to approach SARS on a case-by-case basis. Another comment on the next slide was that the 10% threshold for passive income was too low. It needed to be increased, and we looked at that and thought that that was reasonable. It did align with certain other provisions, and so that change was accepted. Then on the next slide, we had a comment that our list of passive income was insufficiently wide. And having looked at that, we agreed, and so a change was made. And excuse the duplication of the changes were made to 2. The change was made to expand the passive income exclusion to cover royalties and annuities. Moving on to the next slide. The point was then also made that some taxpayers, in fact, have active rental businesses. So you're going out, you are renting out properties. This is not passive income in your context. And so that was accepted, and an exclusion was put in for a company that mainly, or taxpayer rather, that mainly deals with the letting of fixed property. Moving on. We then got to the revised draft bill, and having increased from 50 million to 100 million, the request was then, well, let's make it higher than 1 million, 100 million. And the difficulty here is we start running into problems with the balance that we have here between the automatic relief and government's revenue needs. So given that this is a simplified system, did not accept this comment, and if a larger business requires relief, it needs to do so on a case-by-case basis. Now, another comment on the revised bill was that, well, it's well and good that you are looking at the current year's gross income, and we understand why that is now, but there's a problem in that we're not certain what the gross income is because we're still within the year. So what happens if our estimate is wrong? Can't we give you all the documentation as to how we got to our estimate, and then we can rely on it? So the response to that, yes, is we accept that. If it turns out that you are above the 100 million, but when you relied on the relief in April, May, June, and July, you had a reasonable basis for arriving at an estimate of less than 100 million, and that you weren't deliberately or negligently understating it, then we will consider the gross income threshold to have been met. There was a subsidiary question here, is this 100 million rand inclusive or exclusive of VAT? And our view is that it is exclusive because VAT is something that you receive on behalf of government. It's not something for your own benefit. We again got the comment about being tax compliant, and we did not move, so that would be the next slide. We'll skip over. Again, a comment on the public benefit organizations. The response remains much the same. Moving on to slide 67, having increased the cap on passive income from 10% to 20%, the request was then, well, can we not make it even higher? And the answer here is no. We've already doubled it. The intention here is to assist active businesses rather than those who have a more stable passive income stream. So we did not accept that particular comment. During the public hearings, again, we had the comment around the 100 million rand threshold. And we again draw the attention to the fact that well, two aspects here. Firstly, the comment was made that this doesn't measure the impact of the pandemic. We would respectfully disagree. That's precisely why we are using the current year and not a previous year. And then the other comment was, can we not increase it? Again, the response is that's a carefully judged threshold, and larger businesses may apply on a case-by-case basis should they require relief. The comment about the ability for estimates was again raised, and we would simply point out that the change was in fact made in the bill as tabled. That has been taken care of, so the comment was misplaced. And once again, we have the comment on non-compliance. So we move on to the deferral on the payment of employees' tax, and moving on to slide 72, the idea was that it would be 20% that would be deferred. You would start making your repayments from the payroll for the 1st of August, the August payroll, which is then payable to SARS on the 7th of September. And the first comment we received on the first draft legislation was, well, could we increase the 20%? So that was accepted again after doing some calculations, and the 20% was increased to 35%. And as has been mentioned already, we increased the gross income threshold to 100 million. Now, the next point was that we should be increasing, we should in fact be giving a complete tax holiday relating to pay-as-you-earn. And here, unfortunately, questions of affordability come into play. So that is not something that we could see our way clear to changing. However, if a company is in particular distress, again, the ability to come to SARS for case-by-case relief is available. The next proposal was an intriguing one, which was that the employer should be permitted to, in fact, keep some of the pay as you earn for their own pocket. So the model there would be that instead of paying everything over to SARS, the employer would keep something, but SARS would be expected to credit the employee, presumably, with the full amount of pay as you earn. That did not find favor, and we would point out that there is already an ETI expansion which is available to assist in reducing job losses amongst low-income employees. The next comment was, well, could we have longer than 6 months to repay? Now, here, the difficulty is that if you move it into a 12-month repayment period, you start moving into the next fiscal year. So currently, both the deferral and the repayment are all within this fiscal year. If you change it to a 12-month repayment cycle, you have the problem that you are now pushing some of this year's revenue into next year, which impacts on the fiscal framework. And equally, you have a further problem that employers are meant to reconcile their employees' tax to that they have been deducting with that which they have paid over to SARS at the end of February. And that process would be complicated quite significantly if you, in fact, permitted extension past next year, February. So that would be an additional complication that would exist. We move on to the public hearings. Now, here we've had two requests. So could we increase it to 50%? And again, I make the point about affordability. And also, the more deferral you give now, the greater the pressure you place on the business at a later date. So just something to bear in mind. Now, something that we could consider and would be taking to the Minister of Finance is perhaps we could extend the period for which deferrals are available to run from April to August. So an additional month, and then a repayment over 6 months, which would still then remain within this fiscal year, wouldn't create the difficulties that we have with reconciliations next year, but does give some additional relief at this point. So something to be considered. Again, the point about 6 months versus 12 months, and I think we've addressed that already. And that brings us to the deferral of the payment of provisional tax. So initially, this was a proposal to assist with the first and second provisional tax. Essentially, what's permitted here is the deferral of 35% of the provisional tax. Of course, something to bear in mind with provisional tax is that it's only payable if you're making a profit. So if your circumstances are such that, in fact, you're no longer making a profit, well, you don't need this relief. It's only if you're in a profitable situation. So a comment that was made was, well, on the draft bill that was released, well, can we have a complete deferral? And the response here was, unfortunately, not. Our fiscal situation does not permit that. Then the next question was, well, then can we have further relief? And I come back to it that you are dealing with companies that are profitable here. So the question then arises, well, does that make sense in our current financial circumstances? And equally, pushing it out from the 6 to 12 months that companies have now to 12 to 18 months would impact again on the fiscal framework. Those comments were again raised before in the hearings, so I won't repeat them. We then get to the consequential adjustment on slide 86 with respect to the donations made to the Solidarity Fund through the employer. So the proposal here that was put through in the revised draft was that we permit an additional amount that can be taken into account for employees' tax for donations to the Solidarity Fund. So this is really just a cash flow measure. It assists in taking this into account when the payroll system, because there are two ways that donations could have been made to the Solidarity Fund. A senior executive may well enter into agreement with the employer to say that they will in fact give up part of their salary for a 4-month or 3-month period, or however long, and that whatever is saved should then be donated to the Solidarity Fund, in which case the amount isn't received by the employee and doesn't accrue to the employee, so there is nothing to be taxed. On the other hand, some employment contracts are less flexible, so that in fact the donation would be made out of amount that has been received, at least technically, by the employee, and then goes to the Solidarity Fund. So this allows the donation to be taken into account for employees' tax purposes. So we move on to the next slide. There was a question then. So does it apply to any donation to any COVID-19 disaster relief fund? And the answer is no. The current provisions apply to the other public benefit organizations, which would include COVID-19 relief funds. This particular measure, as with the additional 10% deduction, is aimed at the Solidarity Fund. There was also a query of clarity. So is this something over and above the current system, where we have 5% over the 12-month period, 5% per month? And the answer is yes, this definitely is over and above the current relief that is available. Those two issues were then re-raised in the public hearings, and the responses remain much the same. We get to the next major item, which is on slide 92, which is the extension of time periods. Now here we have a number of time periods in our legislation which are going to be regarded as dies non. Now that's really just a technical term, a legal term that says it's a day that doesn't have legal effect and won't be counted. So there were a number of aspects of the legislation that were listed. What was conspicuously not listed was the requirement to submit returns. To allow government in a timely fashion what the impact is of the current disaster. So the very first comment then was, well, can we please have an extension for all time periods, including the submission of returns? And so the answer is no. And in any event, you would have to bear in mind that some of those returns carry with them refunds. So you have the issue that clearly you would want returns to come in so that we can deal with refunds and continue with the system. Moving on to the next slide. The point was made that perhaps we had overlooked some of the items in that first draft bill and that the list should be extended. And so that was looked at and partially accepted. Additional provisions were added to the list of what were covered. On the revised draft bill, again, the request was for all returns, and we've dealt with that already. Again, more provisions were required to be added to the list. This time we did not accept additional provisions. And then during the public hearings, that last comment was supplemented, and we had a number of additional items covered. And here we would make the point that, and this is slide 98, that there are a number of provisions where SARS already has the discretion to extend. So if you have a look at sections 42 sub 3, 42A sub 2, and 46 sub 5, those all already have an ability for SARS to extend the provision. One of the items that's been listed doesn't in fact specify a time period, so perhaps there was a typographical error there. One deals with the 10-day business day window, where SARS turns down a request for suspension of payment whilst a dispute is being considered. Now, the point to be made here is that during the period of the hard lockdown, SARS did not in fact take such decisions. So this would not have arisen in that period. And the reason it doesn't arise is whilst the request is in, but the decision has not yet been taken, there is, generally speaking, a suspension of collection. So it is only when the request is turned down that the 10-day period stops running. Then we have the question around final demands. Perhaps there should be more time given to taxpayers to respond to those. And here I've checked with my colleagues, and they have confirmed to me that essentially over the period that we're dealing with here of the hard lockdown, they switched to only sending off final demands to those who had already been engaged and had been continuously non-compliant. So this wasn't a general, this was a much more targeted set of interventions that took place over this period than would normally be the case. And then finally, we get to a comment about refunds dealing with overpayments on assessment. Generally speaking, taxpayers do not pay more than is on an assessment. That is a very rare occurrence. And in any event, they already have 3 and 5 years to look at this. So we're not certain that this is in fact something that is necessary, but we're obviously open to thinking about that particular one a little bit more. But it does seem to us that it's rare, and there's already a fairly long period for dealing with these matters already. And we have dealt with the submission of returns already. So, Chairs, thank you for that. I think that brings me to the end of the administrative section.
Thank you, Chair. So, Chair and members, I think you can just from the slides, I think, see the amount of technical work that's really required by the team, I think, to put these proposals forward, and we leave them for your consideration. So I want to add that, and because I think it's an important point, Chair, that we try to do this as a team, and that's why, and not to rush to respond, because we try and think through not just what's submitted, but why are these proposals being made? What problems are we trying to deal with? And of course, to take into account the fact that with COVID, there are cases that clearly we did not anticipate, and we're mindful, I think, of suggestions. But having said that, it's got to be affordable. It is being done within the fiscal framework that we have for the supplementary budget. And just to end, Chair, just to make the point and to remind members, we have therefore not dealt in detail with any of the proposals that were not dealt with in this bill. That will be dealt with in, some of them will be dealt with, as we said, through the tax assessment issues in the TLAB, and just a second round that we will do. We're hoping to publish the TLAB bills later this week, so they may not be incorporated there, but we are considering bringing some of them, well, to the extent that, well, some of these proposals to just possibly bring them into a second round for the TLAB. That's our intention at this stage. I think on other issues like withdrawals of retirement funds, we've looked at that, and we've tried to work out what is the COVID component, because if someone is still getting their salary, should they really have access to their retirement funds? We noted some of the comments by members about housing loans or other loans against someone's pension funds. I should add that some of this obviously will require change of not the tax legislation, but other legislation possibly, but also would require, even if you were to approve it, or to be happy to make those changes, still require each fund to change its rules. So it's not anything that we believe can be done quickly in any case. And therefore, I think our view has been, and the benefits of it are not as clear cut. I think we are still going through the process of reviewing some of the proposals on retirement, even though I personally am not convinced that we should make further changes, but something that we're still looking at, and to the extent that we make any decisions, we will bring it through in the TLAP bills later this year. So, Chair, I think without much further ado, I just thought I'll just provide that context, and these are the proposals we put on the table. We have a document which largely replicates the slides, also been handed out to you earlier today. Thank you, Chair. That's all from the department and SARS.
Thanks, Team Finance and Treasury and SARS for the responses. Let's move now to item 3, stakeholder interactions. Last week we had COSATU, SAICA, Institute of Tax Professionals, PwC, Dr. Yeah, those are the stakeholders. I will move in terms of how last week they were arranged, and they have 3 minutes each stakeholder responding, engaging the responses that come from National Treasury and SARS. So I'll start with COSATU, SAICA, Tax Professionals, PwC, Dr. Naidu. COSATU, are you there?
Yes, I'm here, Comrade Chair. Good morning to members.
Where are you? Last week you were all over the screen. Today you are not. Yes, Comrade Matthews, over to you.
No, thank you very much, Chair. Good morning to colleagues and members. I think from our side, we had raised about 7 proposals as COSATU. If I read the response by Treasury correctly, they've not responded to any of them. And that for us it's quite worrying. So our interpretation is that basically the relief is there for businesses, not for workers. Unions can make proposals, Treasury will ignore them or dismiss them as not worthy, and but yet when government is looking for money, they'll run to workers' funds, be it the UIF, the skills levy, unclaimed pensions, etc. So, Chair, our first proposal was about linking the relief for businesses which we support, to simply say, retain your workers' jobs, and to see how can we incentivize that relief to create jobs. I don't see any response there. And for us, Chair, that's critical because you have employers who are actually using this as an excuse to retrench, and we're going to be using workers' taxes to bail them out. We had actually raised the same conditions around the employment tax incentive at NEDLAC, that you need to tie the relief given to proof that new jobs are being created. Chair, we're also worried about the timeframes. So there's a time frame of September in the bill, but yet it's very likely that the alcohol industry will remain under restriction beyond September. Then there'll be no scope to give them additional relief that they will need because they're not operating, or even to look at some creative options like continuing the excise deferrals for the alcohol industry. Chair, around the COVID-19 relief, we had supported it, but we had simply said, can that be conditional upon local procurement? In the beginning, you will see that we all contributed towards a solidarity fund, and they ran to go and import PPEs from China when those could easily be made locally. Chair, the only way we're going to grow the economy is if we push and force local procurement for everybody. Chair, around the pension fund withdrawal proposal, our proposal was simply that if a worker has lost income or the spouse has lost their job, allow them to access a portion of their pension fund, not the whole of it. We agree with Treasury, you can't support a rundown, but to avoid a scenario where workers simply resign and cash out the entire pension. Workers are desperate. Not all workers are receiving the UIF and other relief measures. This is critical to helping to save workers' jobs and to growing the economy. Chair, I think one frustrating thing for us as COSATU is that we feel that government reneges on agreements all the time. Not only do they renege on the public service and local government wage bills, but even when the 5th Parliament and the ANC manifesto has spoken to providing VAT relief for registered indigent households, there's no movement by government on that issue. Other issues, Chair, we had raised kind of coming to the end, is that we see how quickly government can move when it wants to move around taxes. They can move very fast, which is fantastic. But we've had the scrap metal export tax in the pipeline for years, and government doesn't want to move on it. And that's something that even industry is supporting to support local economic development. Equally, Chair, government moves with speed to increase VAT, but it doesn't move with any effort at all around introducing solidarity wealth taxes. I think the last thing, Comrade Chair, I think that the initial discussion that yourself and Honourable Chair Karim had this morning about a discussion around the whole PPE procurement crisis will be a fantastic one. We'll support it. We've had endless battles with provincial departments, especially education and health, who simply don't want to disclose if the PPEs that they're providing, are they from legitimate companies? Are they imports? We've had a lot of stonewalling. There's lots of evidence of fronting. You have many companies who should have been providing it locally, local producers. But instead, what happens is that I give the contract to my friend. He then goes that local producer and adds a 10 Rand markup. But Chair, there is some good work that has been done by the Department of Trade and Industry, which is set up by a 6-team task team with business and labor to try to deal with the issues. But it would be a very useful discussion, and we'd be happy as COSATU Chair, in concluding, to give you a report about some of the issues we have come across. Thanks, Comrade Chair.
Thanks, Comrade Matthews. Can you please forward that report and share with us through Alan and Nkululeko, please, so that when we meet the minister next week, we're able to make that as one of sources of reference. And we call upon other stakeholders who have got issues about PPE procurement, and they've got points to make or suggestions to make to us to do so. Parliament is a public platform where the public should feel free to interact and use it as a platform to raise issues of their concern. So let's get that report, Comrade Matthews. Send it to the Secretariat. Saika, over to you.
Thank you very much, Honourable Chairs and Honourable Members. From SAICA's side, we just really want to express our acknowledgement of the pressure that National Treasury was under when drafting this legislation, and we are really appreciative of their efforts in this regard. We look forward to the changes to the TLAB bill that we've proposed, and we hope that the Home Office allowances, the essential services relief to those workers that are at the front line will be considered, as well as the care packages for the essential employees. So we do look forward to that second round of the TLAB process. Regarding the Section 18A donations relief, I just want to clarify that we're not concerned about the donation to the or the deduction by the actual COVID organisation itself. It's the deductibility or the deemed deductibility and the approval of that deductibility for the person making the donation to that fund. According to the explanatory memorandum, it says that's got to be approved, and that's where we find it a bit tricky. So it's not actually the deductibility by the organisation itself, but rather by the actual individual making that donation. That was our concern, and I think it is correct that it is more an administrative process, but it is something that I think should be clarified both in the explanatory memorandum for everybody concerned to ensure that those making those deductions do get the necessary tax relief. If I look at the third point, which deals with the accountability, sorry, just getting back to the public benefit organisations, we note your point on that. We've got various calls from a lot of them that are really suffering. We do realise they're not trading as such, but we acknowledge that they can get the case-by-case relief. On that point, it is good that that option is there. Like we said originally, I think this is just a lot of an administrative burden for many of the especially the PBOs that now have to try and fight for additional relief while they are struggling. But we are thankful for the opportunity for them to actually apply to get relief, despite the fact that they haven't been included in the original legislation. And lastly, I just want to finish off by saying that we also, as COSATU said, and all of you did agree this morning, I think, support this committee in ensuring accountability with regard to the procurement process. This is Parliament's right and obligation to do, and we do hope that we get to the bottom of this and make sure that this doesn't happen going forward. So that's all from our side. A big thanks for all the effort that has gone in. I know that we were communicating on weekends with a lot of the SARS officials working on these issues, both from the practical implementation side and note our comments as well from the Treasury side. So a big thank you overall from SAICA's side. Thank you.
Thank you. Hello. Okay. Thanks, SAICA. Let's move to the next stakeholder, Institute of Tax Professionals.
Thank you, Honourable Chair. Thank you to Honourable Yusuf Karim as well for his contribution. And then from our side, from SAIC side, thank you to our colleagues from National Treasury and SARS for your comments today, and especially for the clarity that you've brought to the decision-making process. The item specifically that I would like to highlight is the intention to have further discussions with regards to specifically looking at further relief should it be necessary. I know Mama has said that all depends on what happens with the pandemic going forward. So that is acknowledged. The fiscal constraints we acknowledge, but we do appreciate the fact that everybody's on board for looking at additional measures should it be necessary. The one item I think I would like to address is the looking at residency for both, be it from, for example, a permanent establishment as well as then individuals. To the extent that we are sitting in the current financial year, decisions are being made as we sit here with regards to taxable payments and so forth. So to the extent that those discussions can be brought forward, that would be certainly be appreciated. The intention from our side is that to continue to engage with the tax industry in that regard, specifically because they are looking for more policy guidance with regards to that so that they can make decisions going forward as to what their payment structure should be like. When it comes to specifically the items that you've mentioned, specifically from SARS' side, the relief provided, the dies non, and so we appreciate everything done from that side. And I think the one item is on the retirement funds, the drawdown. Acknowledge the comments that there's no direct evidence that it will assist, but also I think to echo what COSATU said, there's a lot of financial strain being felt by households, and unfortunately in our current economy, and this being South Africa, there's not a lot of other funds for some people to tap other than their retirement funds. So I think it's a last ditch measure in certain instances. So in that regard, we would certainly support some engagement on that. Thank you very much, Chairs. Thank you to our colleagues.
Thanks, the Institute of Tax Professionals. Let's move. The next stakeholder is PwC. Over to you.
Thank you, Chair. Yeah, a couple of things. I'm not going to spend a lot of time. Just want to say thanks to Treasury and to SARS for all the effort and everything that's gone into putting these relief measures together. We said it last week, and we did make a comment that the comment process and the interaction could have been a little bit better, but I think given the circumstances, it's by no means a criticism. It's just a comment, and I think Treasury and SARS should be congratulated on what they have achieved. We appreciate the fact that cognizance has been taken of the subsequent changes to the ETI formula, which resulted in, the relief for certain employees, specifically those earning less than 2,000 Rand. A retrospective change in that, and we note the slides say that interest and penalties that'll be looked at and that'll be remedied. It's just obviously it's difficult to get documents and everything all coordinated, but I know that the actual draft response document just says on that point that it's noted. So, I mean, if we could just have a little bit more clarity, people are, stakeholders are fairly anxious around that issue. If I can just touch on the issue around the retirement funds. I mean, it's not something that we raised in our initial comments last week, the presentations last week. But I think it's just got to, what's got to be remembered. I mean, if you have someone who has been retrenched, they don't have an income, and they are in a hell of a difficult position. And I don't think that in those circumstances, just want to reiterate, I don't think in those circumstances, and I think it's reasonable that, that SARS, the fiscus, should take an extra hefty bite out of it that they would normally take when someone is taking it, taking it on a basis that they just want to spend it. It's not been taken because people want to spend it. It's been taken out of desperation and out of urgency. So, in those circumstances, we would welcome further engagement in that regard. But otherwise, that's all I have to say. I'm going to close off. Thanks.
Thanks, PwC. Is Dr. Naidu here today?
Chair, Dr. Naidu, by the looks of it, is not on the platform today.
Okay. Thanks. Let's go back to Treasury and SARS to respond on the comments made by stakeholders. Treasury.
Okay, Chair. No, thanks. Chair, I think, I think just hearing the comments, it's obviously difficult for people to comment on the TLAB since we haven't published it yet. We had hoped to have it actually, but hopefully we'll do it later this week. But I think just to point out, there are some issues, like, for example, that COSATU raised on the export tax. Those were in the budget. And so just to remind members and those submitting comments, stakeholders, that bear in mind that all the budget measures are being done in TLAB. They're either done in a rates bill when there were rates or thresholds, and all the major announcements made in the budget which aren't in a rates bill will be in a TLAB. So the export tax, there was the minister had announced that as a budget measure. So some of those measures will certainly be taken into account in the TLAB. I think the other point I wanted to make is for the proposals that haven't been made in the budget, but which are COVID related, we said that would be the second round we would take into account. And I know that a lot of the comments made, perhaps people are tax professionals in many instances, but they're not necessarily looking at the rules in retirement funds. So it's quite important they take that into account. Some of these may or may not be tax issues. And to the point, for example, that if you retrench, you have access to your funds. In fact, too much so, the way the current system works. So it's just specific instances where you are still employed. Now, if you're still getting your full income, should you really have access to your pension funds, even as a loan? That's the question. Yes, it may be that your household income may be down because somebody else is not getting their full income. We've been having discussions with Labour and NADLAC on those, for example, who have received lower income. So they're still employed, but their income has been, they're only getting partial income, and then access the TERS program for the UIF. How do you deal with it? And for some of those, given that there was an urgency around those issues, we could not do that through the Disaster Management Act. That does require pretty hard changes to legislation. And so if it was been proposed as an emergency measure, and now that many are gone back to employment, it's not clear to us how many people would need that. And also the administrative issues are quite difficult. Bear in mind that when we've looked at the COVID measures, we've always tried to say what can be done quickly, what can be done immediately, what can be done easily. And that's why the tax system has been utilized, because it could act very quickly, because it just meant people withhold the amount that they are effectively handing over to SARS. So they were in effect getting either an interest-free loan, or in some instances even paying slightly less tax, to the extent of 27 billion rands. Those were the losses. But those we could do very quickly. Some others may now be reached through other programs, either the credit loan guarantee scheme, if it's a loan, and some of the other measures within the 500 billion rand program. So I think that should just be borne in mind by stakeholders and members, that we're not here today giving a comprehensive COVID response. We're just responding to the COVID tax measures. But let the team come in. I don't know, Yanga, if you want to come in, and Chris and Franz, on the specific questions that have been raised that I haven't covered.
Yanga, do you want to start, or shall I? Okay, I can. Thanks, members. I think there are a couple of points that were raised for us on the employment tax incentive. I think Kasatu raised, they haven't been responded to on some of the questions. I think we did try to respond on the conditionality question. We've got a slide there where we spoke about it, and that it had been discussed previously before the incentive began, and it has been discussed in NEDLAC. Our view was that the conditionality of requiring an increase in payroll in order to access the incentive would have had a detrimental effect on those firms who might have had to reduce their sizes, that there would be even more job losses for those firms. The NEDLAC report did support the extension on the employment tax incentive in the current design that it was implemented unanimously by all the constituencies within NEDLAC. But obviously we will continue to look at that incentive. There was a point on in the response document that it said only noted for penalties and interest for excessive claims for those below 2,000. I think that was a duplication. We do have another paragraph in the slides, and I think it is also in the response document, where we do state that we are looking at waiving those penalties and interest for excessive claims in those instances. There was a point on solidarity and wealth taxes that had been made. I think what we had said previously in the response to the supplementary budget, because there were a lot of calls for additional taxes there, was that the minister had announced in the supplementary budget that tax measures such as those would be announced in the February budget next year, but wouldn't take place currently. So those types of larger decisions with new tax measures would be considered and discussed and potentially announced next February. I think that's everything on my side. Thank you.
Thank you, Chair. I think from my side, there were few comments on Section 18A tax deductible donations raised by Professor Sharon Smulders. I just want to say that we will clarify the EM, but we welcome, you can write us an email, because we are of the view that the legislation is clear, similar to what we have done when we are receiving comments, whereby we communicate by email. we welcome further discussions with you in this regard so that we can clarify the EM. And then there were comments raised by Beatrice, like on the issue of residency test and the number of days. As we are of the view that that is an assessment issue. Now, when you say that because employers want to know how to pay, meaning that now they want to do tax structuring, but that said, as Momo has said, that some of the issues will be considered later. That's all. I think now that's France.
Thank you. So I think one to my address, and this was around the excise deferral for the alcohol industry. So that is something that can be done by rule. So it does not require a legislative intervention in the primary legislation we're considering here. So that is something that can be considered separately. So the only input from me.
Okay, thanks.
Chair, yeah, we're done.
Okay, thanks, Treasurer and SARS. Let's move to the next item 5. Comments and questions by honorable members. Alan and Kulak will assist me to note members who want to speak. Where's the management platform? It's here. Can you see members from your side raising hands who want to speak?
Yes, Chair. I've got Mr. Hill Lewis.
Thank you, Chair. I've got a weak signal today, so I'm going to see if it works with my video off. But please, if I drop off, I'll come back on. A very quick question. I did raise an example of a pensioner who earns both a pension and a small, interest income from a fixed interest investment, who is a provisional taxpayer, but their total income is less than the tax threshold for their age, but they have to still pay the provisional tax and then claim it back at the end of the year, which for someone in that kind of financial position is quite a burden. I asked whether we could look at a way of eliminating that provisional tax requirement for pensioners who earn less than the threshold. So Treasury hasn't replied to that today, but that's not a problem because I understand that it might be something that we need to look at in more detail. I just wonder whether Chris or Momo could please be in touch with me, and I will share the details of the example with them, and we can discuss whether there's a way that we can fix it either when the bill is published or in October. I would be very grateful for that follow-up. Thank you.
Thanks, Honorable Lewis. Honorable Ryder.
Thank you very much, Chair. Yes, and excuse me, sorry. I want to also voice my expression of admiration and gratitude for the agility of Treasury and SARS, because I think that they have gone some way towards restoring my faith in the public participation processes that Parliament holds, because they have responded, I think, well, first of all, to the original issue, but now also to the concerns that were raised last week. So well done. But having said that, there's a couple of issues that I wanted to raise. I think that if you see a shoeless man and you give him one shoe, it's a remarkable thing to give him a shoe. It's a show of compassion, but actually it's not solving his problem. So I think that in many instances there are some admirable things that are being done, but not all of them actually take into account the financial impact that this is having on many South Africans. And I do acknowledge that it's not SARS's or Treasury's role to totally solve the problem, but I think that, for example, declaring 21 days dies non is great, but actually there were 35 days of hard lockdown to start with. So why not make that the 35? Because frankly, if you're going to do 21, you're acknowledging that there was a problem. It should be 35. I'm not going to go down into all of the details of specific instances. I wanted to talk to two generalities, and I think that the extension of the time that has been granted, certainly for deferrals of tax liabilities, there was some leeway in that, and other places where it wasn't granted. And I want to comment on the statement made by Mr. Mamania, where he said that we hope to be back at a 90% economy within the next 2 months. And frankly, I mean, that's not going to happen, because realistically, we've already been told that we're looking at a shrinking economy, shrinking by at least 17%. We've had higher predictions as well. I think the optimistic projections are 17%. So we're not going to get back to 90%, and certainly not when you're sitting with an economy that's got around 70% in the tertiary industry, which have been the most affected by this, and many of which are still suffering under lockdown regulations. At least, and I've done a quick calculation on what I could get, 8% directly impacted by the shutdown of hospitality, alcohol, cigarette bans, etc., etc. So we're not going to get back to 90% in 2 months. And most businesses are not just a case of turning on a switch and suddenly the income starts streaming in again. You've got long lead times. You've got, certainly in the hospitality industry, 6 to 12 months lead time for bookings and so on. And remember, we're coming into the hardest part of the year for this industry. So I think that's not realistic. And on that basis, I think I would have motivated for more deeper consideration of some of the extensions of some of the leeway that has been given. The last thing, Chair, that I wanted to point out, and Mr. Mamani had made that point, but you can't look at someone who's still earning a salary in isolation to consider what the COVID component would be. Those were his words. When you're looking at relaxing some of the retirement funding regulations, because frankly, you do have complex arrangements where people live in families. The cost of living is certainly up. Income is down for a family unit, and if someone has some savings, you can't just look at the fact, are they still earning a salary, when you're starting to evaluate whether they have a legitimate claim or not. Thank you, Chair.
Thanks, Honorable Ryder, Honorable George, and then Honorable Abrams.
Thank you very much, Chairperson, and thanks for the feedback. My line has been a little bit choppy this morning, so maybe I missed something, but you'll tell me if I have. I did raise the issue, basically 3 issues really. Firstly, on the home offices, I did raise that issue that people have to stay at home. It's not the choice that they made. There are rules we know currently on claiming for a deduction, but I wanted to know whether there's been any further consideration on this. I did read in the newspaper something or other about claims, that people can claim for their home offices, but it certainly nothing changed at all. It's just a clarification of what the rules actually are. So I'm asking whether there is any consideration or any conversation going on about support for people who are forced to be at home because of the virus, and that whether there can be some kind of accommodation for them to claim for their home offices. I know that there's discussion on what the potential implications could be then further down the line for CGT or something. Oh no, sorry, if they sell their house, yes, on CGT. Yeah, I do think it needs to have some kind of consideration, and I'd like to know whether there is any. And then also then, as I mentioned before, on vehicle allowances that people would need to pay tax on, they also can't use them because they cannot actually travel. So whether there's any consideration of support at all, because I think it's very important to bear in mind that your hard-working average salary taxpayer goes to work every day, loyally pays their tax, etc. Now is a time of hardship for everybody. And it is people such as them who also deserve some kind of consideration in these very difficult times. And then finally, Chairperson, the issue I know I've raised before, I just wanted to raise again, and I will continue to raise again, is that the issue that people have been raising regarding their pension funds. Now, we know, obviously, we do not want to erode anybody's ability to make provision for their retirement, and don't want to burden the state either with having to support people in old age if they can support themselves. I mean, that doesn't change. But certainly, I want to know whether there's been any thought processes going on in terms of being creative, in terms of allowing people to perhaps leverage their pension funds in the form of a loan or even a part withdrawal or something like that, whether there's some kind of discussion going on, because I think it's very, very important. Especially, I mean, we can understand the problem is that people who have been, for example, contributing to retirement annuities for a very long time, and it's to the benefit of government that they do, they have been contributing to RAs for a long time, are not able to obviously retire from them before the age of 55, cannot access a loan on them now, and they cannot, if they wanted to even leave their employment, if they were lucky enough to have a job, access that money. So I'm not saying you want to leak the retirement pot at all, but what I am saying is that we can be creative on assisting people to leverage, and I want to know whether there's been any thought processes on that. Thank you very much, Chairperson.
Thanks. Honorable Abraham. Honorable Abraham. Colleague, have we lost there?
Hello. It's worse because I'm in East London. I should be clearer, but where I am, it says the network is weak. So I'll be quite quick, Chair, if you may. Hello,
Yes,
Chair.
Yes, then after you is Mhlekazi Njandu.
Okay. No, thanks, Chair. I want to appreciate both National Treasury and SARS for the responses. You know, it's always a pleasure when you see that they have given some thought in what has been raised by the stakeholders. And for us as the ANC, it strengthens public participation, because when you consider people's issues and interests, you make them even more interested in contributing to government, which is really what we need to have, that a community that is able to contribute into governance and be heard. I want to really appreciate that. Secondly, Chair, I want to just say to National Treasury, some of the issues that we may be raising with them may not be their direct responsibility per se, but they have another responsibility to oversight departments because of their role as National Treasury. And therefore, I just want to echo what has been raised by COSATU on local procurement. And I think to a certain extent, there is a perception of high-level corruption at that level, which stimulates also corruption at other levels as well. So that at the end of the day, we would like to see a situation where anything that can be obtained locally, we go ahead and do that instead of opting for external procurement. And secondly, Chair, on the issue of UIF, you know, I think the statement has been made in the past that the lockdown situation has played quite a huge role in opening our eyes on a variety of issues. On UIF, for example, you have had exposed some of the employers who were not deducting for UIF. But then you have others who have claimed UIF and have not gone ahead to transfer to the employees. And my take there, Chair, is that Treasury should oversight such and be able to set our minds at ease as to what it is that is being done to ensure that the UIF becomes or stays beneficiary to all employees. Thank you, Chair.
Siyabulela. Honorable Njandu.
Thank you very much, Chair. Good morning, members. Yeah, Chair, let me also welcome the presentations and also say that a lot of work have been done and to align to the COVID-19 compliances by National Treasury, which one is very greatly appreciating. Chairperson, I think I want to join you when you open the meeting on the issues that came out during lockdown and the number of corruptions that took place. So I think I want to be more emphasized and specific on also join Honorable Abrams in terms of the specific on the employees who claimed, one would say, claim fraudulent and make submissions but never pay those monies to the employees. And also further to say that what will be, my question, I want to raise a question on that, to say that what will be the implications for those instances, because one cannot just hear that these things are happening and nothing is being done. So that one understand as to, also to understand as to what plan do National Treasury have to ensure that these things are not happening in terms of the oversight role of National Treasury, so that we as the committees also to be able to be effective on our role as members of Parliament, to know that the role of National Treasury, so that we be able to be more effective in our role, to make sure that when we got this presentation, that we have some recommendations as to what to do to ensure that these things are not happening. So, Chairperson, I think my point will be to put emphasis on the issues that are raised in terms of the maladministration within the companies and things not being done correctly. Thank you very much, Chair.
Jandu. Chairperson Karim, over to you.
Thanks, Chair. I haven't very much to say, except that my boring point that, well, personally, I feel less certain and secure about what the precise policy issue should be, given all the volatilities and uncertainties about COVID-19, and given the generally very challenging issue of MPs processing bills, when the technical knowledge and experience is weighted very much in the direction of National Treasury. But I like what Momo said at the outset, you know, the way it's clear to me now what it is we're dealing with. I didn't get that sense earlier, maybe it was just me, but, you know, the separation between what's going to be here in this disaster management relief bills, what goes into the TLAB, and what is in preparation for next February. So I think that helps a lot. The second thing to say is that, excuse me, I remain, let's say, unconvinced that we've got a fully useful reply from Treasury on what the real issue is about implementing localization far more. Now, obviously, none of us supports what's going on at the moment with the allegations of abuse on the PPE. And Chairperson, you and I know offline some of the things that, and perhaps others do as well, that are claimed to happen. So I like what you said, which is that this is where things are. We have no choice but to do this inquiry next week and further. And we shouldn't prejudge the situation, as you said. I think that should also be something that we should bear in mind. So I want to say that. Then thirdly, I also think it is quite impressive, really, Comrade Chair, on balance, as to how good, at least how comprehensive, whether I agree with the issues or not, well, I'm grappling with them anyway, how good Treasury has been in, and how precise they've been in responding to many of the issues. It's very good work to, I think, the Treasury team. But it does strike me that COSATU feels completely bereft, right? I don't think the reply also sufficiently addresses their concerns. And this is not because I'm empathetic with COSATU, as many of us will be. It's because it's about fair play. Now, it's wonderful also that there were all these discussions and there were concessions made. But it's interesting that Saika will say, with due respect to Sharon, I mean, it's not a personal thing about her, that, you know, we engaged, to use my words, metaphorically speaking, endlessly with Treasury over the weekend, and we thank them. From COSATU's side, it'd be interesting to know what engagements were there between COSATU and Treasury over the weekend. Matthew's a sort of guy, I think, Chairperson, you and I know, who, like Momo and others, they're younger than them, is available on a Sunday morning at 2 o'clock on his phone, right? So, and he has 2 phones, by the way, so you can reach him on either. So he's on permanent call. So, you know, very interesting to know. It comes back to the point, Comrade Joe. People saw our statement earlier, which was slightly clumsy, as being racial. It's not about, it's about fair play, which is about public participation. To the extent this committee, as in the last term, which is something we said on the exit report, Chairperson, something we have to do something about. We can't keep coming back to this. To the extent we encourage public participation and we insist that Treasury meets with the stakeholders, well, even virtually now, and comes to some sort of give and take approach and come back to us, though ultimately, of course, it's Parliament's decision, even if they come to some halfway house between the two parties or deferring parties, it's for us to decide that we agree with nobody, neither party, or no, none of the parties, and we have our own view. Or we can say, all right, we think what you've done is good, and we will come to terms with what you've done and agree with it. The fact is that it benefits certain strata and not others. And usually it's the powerful NGOs or business and so on. But in this case, it's very lopsided from what I can see. But I also want to say that ultimately what this process suggests is that, and we've all said it, Comrade Chair, across political parties and many of us in the ANC, we're not happy about how tax bills are processed. And we want greater say. But, you know, we are hidebound by the circumstances, court decisions, and norms and rules that Parliament has adopted. And we don't go through the calendar year and so on. But we should look, as we've said, into what more we can do. But it does suggest that even within the constraints that even were raised by the parties in this public hearings last week, they've got a lot more than we've made out by their own views. That, you know, Parliament is no more than a rubber stamp. I've never agreed with that. The process is torturous. A lot of it gets done offline, but it's not true. Not true at all. We made many changes to these bills, but no, we're not happy with this process. And Chairperson, it comes back to your committee in particular to do more. Finally, on process issues, Comrade Chair, we cannot duplicate the NA. I'm just alerting everybody and yourself and the NA committee. So, you know, it's something I'll engage offline with the opposition parties from the select committee. I'll confer with Frank Jenkins this afternoon. But as I see it from here, we've agreed, even outside of COVID circumstances, that when it comes to briefings and public hearings, the two committees are together. But when it's not a Section 76 where we have limited power, our role is to have some sort of oversight. So I'm going to look into consulting with Frank to see, and I don't see a problem personally, Comrade Chair, as you might know, because you know me now. I don't see a problem us continuing to meet, but there's a sense in which we can't, you know, put all our cards on the table now, because the issue will arise that what role has the NCOP played of so-called oversight or review of what the NA has done, if all the time we've sat together and we fully participated and so on. So, Community Chair, I'm not sure where we go from here. It's new territory, as it were. It's new circumstances, but we can't abandon our role as the NCOP, and I'll come back to you after conferring with the opposition parties and lawyers. Thank you indeed.
Thanks, Chairperson Karim, for your comments. I think from here, Alan and Nkululeko, next week, are we dealing with the report? Tuesday, Wednesday?
Yes, Chair. So it would be deliberations. We've scheduled it over 2 days, that's Tuesday and Wednesday. So it would be deliberations and the report, and if there's a need, then the committee will then, or the committees will then sit on the Wednesday as well.
Okay. Thanks, everybody. But also to remind the Treasury that we still have outstanding briefings. I see the latest development to the effect that IMF has approved the 70 billion rand, whether 70 billion rand, I'm not sure of the figure, loan. Parliament has to be briefed, given a full briefing by Treasury about the IMF loan as it has been agreed before. We also requested Treasury to come with the Solidarity Fund to come and brief Parliament about the activities of the Solidarity Fund, their mandate, the work they've done up to so far. Of course, the issue of PPE contracts that we have agreed upon today, that should be prioritized for next week. Also, Momo and Memputa Younger, the PIC report, if you remember the other time we had scheduled the meeting for the minister to come and brief Parliament on the recommendations of the party commission. You have requested Parliament to give you space and time to process those recommendations. You will have to come back to Parliament and indicate as to when will you be ready with regard to the PIC report recommendations, and how will you want to implement them? Because the President has referred the PIC report to the Minister of Finance. I'm just reminding you about these outstanding briefings so that they should not disappear from our radar. And I think the Parliamentary Secretariat should make sure that from time to time you make a follow-up on these issues and other outstanding reports. Unless there are announcements from Secretariat before we close the meeting.
Person, can I just raise one process issue that we need to mull over? There is no urgency to vote. We can confer offline, and we can confer with Frank and also Treasury. There is no urgency to adopt our report, well, both sides, next week. And for the NCOP side, the powers that be have engaged with me that we can't take this bill to the House on the 4th of August anyway. So unless both houses pass it, it's not going to happen. And we also look at the formal processing of the bill and so on. So, we need to look at all of that. So the report and what is an informal process and what's a formal process given COVID circumstances. whatever we think, Comrade Chair, about Treasury's policies, they've really performed very well. But there is no obligation on us, as far as I know, on either house, or at least either committee, to vote on this report. So I think that your engagements by the Secretary and ours, based on what we've said about next week's program, may mean that, what we have before us will have to be reviewed. And I'm sure members will broadly agree with the practical changes we're required to make in terms of the discussion we had today. So in short, given the informal and formal processes, given the deadlines, given the need to engage with Frank and Treasury, I don't think we should stick by the program you've got, and corruption's become the big issue. So I think that's the priority. And secondly, maybe some of the other issues you raised, given that we've just had the IMF loan secured on Monday, maybe that should come before deliberations on the clauses and the final adoption of reports on your side and then us. But this is something we can talk offline just to alert committee members, because they might see a change in program. Thanks, that's all from my side.
Thanks, Comrade Karim. I think let's discuss that, as you said, offline, so that we can take the matter up with the programming committee, so that if there has to be an adjustment on the program, we're able to do so in time. Because for now, the program indicates that next week we process the report. So if we have to amend the program, let's do it this week, so that we send an amended program to the members in time. Thanks very much, honorable members. The meeting is closed.
Thank you, Chair, and well done to Treasury and SARS. Thank you.
Sure, Ryder.
Thank you, Chair.
Thanks, Momuniat.
Everybody.
Thanks, Chair.
Siyabonga.
Thank you, Chairperson.
Siyabulela njalo.
Thank you very much.